$99 out of 1,000. That's not where you're considered max. You're considered max at 43%. So you want to stay in between. We'll get into this too later on, but you want to stay between 1% and 8% to really reach that 800 credit score. Accomplishment, if you will. So the next part is 50% credit age. How old are your credit accounts and your trade lines on your credit report? Is it 2 months? Is it 5 months? Is it 35 years? Have you had credits that you've, been 13, 15, 18? Like those kind of things are very important too when it comes to your credit age. But the biggest two powerhouses are how much do you utilize and how much do you pay your bills on time or ahead of schedule. The next part is your credit mix. So what do you have? You have credit cards, student loans, short-term loans, long-term loans, car loans, mortgages, those kind of things. And now, of course, there are ways that you can actually build credit through your renting, right? They just allowed some of those things to be included in the new FICO algorithm from Fannie Mae and other companies have decided that they wanted to switch from being able to focus so much on FICO and let Vantage Score be a part of that for those individuals who are utilizing rent to increase their credit scores as well. So it's a pretty cool thing that happened recently in the credit industry. 10% number.
And I'm sorry to interrupt, but that's a very good fact, right? Because I think a lot of people looked at, okay, if I have a mortgage, that can help from a percentage standpoint. But I'm glad you emphasized the rental option.
Yeah. I think that's pretty cool too, because a great part of people in this economy are renting versus owning, because it's harder to own. Why? Because you can't get the interest rate you need right now in the market. It's hard to sell. It's a seller's market. It's the buyer's market right now. So those individuals who are looking to buy homes, with the way that the Fed is, you're looking at 6.25% and up on the interest rate through the Fed. So it's harder to buy a home. But those that can't buy but need to rent, you can now utilize that to build the credit score you need, so you're able to buy once this housing market continues to settle as we continue in 2026 and move on to the first quarter of 27. So it really matters how you kind of carry your credit report and things of that nature for the FICO and for the Vantage Score 3.0. So sounds good for that. Next. All right, so pitfalls to look out for, right? Obviously, late payments result in late fees and damage to your credit score. But I do want to say this: if you, for some reason, have a late payment on a credit card, what people forget and tend to not do is call up your credit card company, Citibank, Wells Fargo, Navy Federal, Capital One, whatever the case may be. You can call and be like, hey, look, this is not a customary for me, or Amex, this is not customary for me. If you don't mind, can you just go ahead and reimburse me the late fee? And 9 times out of 10, y'all, to be honest, they're gonna say yes. Mm-hmm. So just call and do it, right? There's no shame in your game if that happens to you. Just don't make it a habit. But if it does happen every now and then, don't be worried, don't be ashamed. Just go ahead and call them and be like, hey, can you reimburse it? They'll say, okay, cool, let's look at the history, and you should be fine. So not too much of a big deal there. They have some grace. Now, maxing out your credit limit, we talked about that too before. 42 to 43% is where you should not be. That's considered max. Don't do it. Watching out for hidden fees like annual fees and cash advance fees and foreign transaction fees. Most cards, if you have a really good card, like I know Citi Advantage cards are super, super dope to have, whether or not you have the executive black card or you have they used to be called Aviators, but Barclays just switched over from the Citi. The Advantage card just shift over from Barclays to Citi on the one that they had, right? And so now it's no longer called a Barclays Aviator card. It's called a Citi Globe MasterCard. And so it's been rebranded and moved over to a new bank. But the Citibank cards are super awesome to have. Your Chase ones, all those different kind of different things you want to put in your portfolio, you can have them. And a lot of them don't have foreign transaction fees at this case, especially when you're going to like Mexico. Mexico's pretty safe, but outside of Mexico, you do want to check just to make sure if you're going to Dubai or, the Middle East or Africa or something like that, Australia, you want to double check what the foreign transaction fees will be so they're low when you go. All right. Also, good thing to have is 0% introductory rates. Those are really great, but you need to pay off your debt before the rate expires. So, for example, let's say you get a 0% interest rate for 15 to 18 months on a really awesome car, right? You're utilizing that car to increase your credit score. But let's say you're at, I don't know, $400 left to pay it off, right? You're not going to wait after your 0% introductory rate expires to pay that off. You want to make sure you do it beforehand. Or your other option is to roll over another 0% introductory rate card and keep it going. You know what I mean? That's kind of how, you would do that as well. And you can play that game too. It's called the 0% introductory rate game.
Interesting.
So that's kind of, and you want to do that towards the end of the term and make sure you set a reminder, maybe 2 weeks out or a month out from when it expires, so you're able to tap in and make sure that you roll over to a new one. Next. A couple of these, I'm not going to name all of these, but some of these takeaways that really building credit is have no more than 2 personal credit cards or credit lines, unless you have excellent credit, right, and won't use them. I have a lot of those, right? But in order for you to really take the advantage of having the best pathway to build your credit, you want to start off with, with a couple of them, right? But you just don't want to sit there and have credit where it's going to detriment you on your profile. You want it to be something that can build you up. Obviously, another thing that people do they shouldn't do is closing their card. If you don't want to use it anymore, folks,
or in fact,
don't use it. That's fine. Just don't close it though. And you can cut it up though. You can cut it up physically, so that way it's in the trash. But don't close the card. That's utilized for your age. If you had a card that you didn't had open since you was like 20 and you're like 50, right? Then that's a card that you got 30 years of age. Because what happens is you take a card out of commission and call them and say, "Yo, I want to close my card." Then what happens is your average age across the board decreases, and now your credit score drops because you don't have enough age, right? So be mindful of that when you guys are looking into closing cards as well. Now I will say this though, I'm not a big proponent of retail cards, like Sam's, or unless you're utilizing Sam's for business credit, don't do it for personal credit. Macy's, what else? They used to have old school Sears back in the day. Victoria's Secret, y'all ladies out there. Kohl's, like Home Depot, all those cards I would not utilize. I would actually close those. I wouldn't keep them on my portfolio, because to me they're not real cards that you need to have. So that's just my recommendation to you. Have at least 4 accounts on your credit report, 2 credit cards, long-term debt, short-term debt. Utilization should stay between 3 and 8%, technically between 1 and 8 if you're trying to get over 800 credit score. No double-digit interest rates if possible, but if you have to have one, it needs to be 10% or less, right? And if you have a bigger one than that, call the credit card company and ask them if they're able to reduce your interest rate. Sometimes that does work too. Through the course of time, but we're in a shaky market right now, so there may not be a lot of wiggle room in getting that granted to you, but you do want to double check it and see what happens. Also use the 90-10 rule. We'll go into that a little bit later on. Never pay the minimum payment, of course, as well. And we talked about the balance transfer. Well, we talked about the 0% introductory rate, but there is also another thing called a balance transfer, and you can balance transfer your debt onto one credit card. Or if you have multiple, you can transfer multiple debts onto one credit card and get 0% interest for like whatever the timeline is, 12 months, 15 months, something like that. In addition, when it expires or it gets close to expiring, transition it over to another balance transfer, right? So those kind of things will help you as well build your credit for the good part next.
And Jay, before you go to the next slide, I just wanted to reiterate what you mentioned about not closing credit cards to increase your age. I think that there's a lot of people, and it might just be generational, right? Where you might have been exposed to getting your credit card when you were in college, and the credit limit was low because you were just looking at like, oh, I just want to get some books and food, and then you're thinking, okay, now that I'm out of school or I want a higher credit limit, that I need to cancel it, right? And so I'm glad that you said to keep it. I think you're also going to talk about like ways to like expand like your level of credit too. But I'm really glad that you mentioned that, because I think that there's a number of people that are like, oh, I'll just close it because it's had a lower credit level than what I wanted, or with
Exactly.
or incidentals.
Exactly. Absolutely. Now, if you're between 18 and 25, those that may be watching, or you're younger, or parents out there that's watching, and you have kids that are at this age, how to really build credit early? Well, they can start off by becoming an authorized user, which means that they assume your credit limit, your age, your obviously, the interest rate, all those kind of different things. There's, your payments, although they don't necessarily have to pay for the card, obviously, but they are able to assume you. So they are cloning you on your credit card account, but they're just not you. They assume every other power, so to speak, for that card. So if your credit limit is 55,000, 89,000, unlimited, 100,000, whatever that looks like for you, your authorized user, your son or daughter or whoever, right, your family member is able to assume what you have and piggyback off of what you got going on. Now, for the parents out there, don't be putting your kid on an authorized user for your card and your credit ain't right. Make sure that if you have a credit score that's at least 750 and up or 700 and up, then I suggest doing it. Anything below 700, 750, you need to do work on your own first before you bring them on as an AU. So just make sure that you follow that as well to get them on where they should be. They want to open their first credit card. Get them to do that. Keep the utilization under 10%. Pay bills on time. Build a thick file eventually. And the goal is really to have 3 to 5 revolving accounts, 1 installment account, and no late payments. The mistake that people make, of course, like I said, is that people max out starter cards. Don't do it. Make sure you do not max out your starter cards, right? And that's how you want to really start to build credit early. Next. So we talked about this earlier. I want to kind of go a little bit more into detail. So the 90-10 rule is really big. It's an unwritten rule that people don't necessarily know about. Those that have worked for the credit agencies, Experian, TransUnion, or Equifax, or some of the big, data furnishers, right? Like LexisNexis and things of that nature. We know these things because we were embedded inside of the credit agencies, right? So one thing that you need to understand and do is if you have everybody believe, old school people before, I'm the latter millennial generation, but before us, what I'm saying, that generation was like, yo, pay your card off every month. Don't have no debt. Have everything all cash. No, we're not in that time anymore, right? Cash used to be king a long time ago, but it took a seat, right? It took several seats, as we say. What happens now is that people need to start looking at how much credit can I get? How much credit do I have available? You know what I'm saying? How much utilization do I have or not have? Like, how can I leverage credit? These kind of things are now what conversations are the conversations people are having to set up their stage for legacy building and success later on. It's not about cash anymore, y'all. It's about credit. So don't pay off your card every month. You want to use the 90-10 rule, which means that you pay 90% of what you owe off by the statement date, right? You leave 10% on. You take that 10% and roll it over, which is normally 2 to 3 weeks, 14 to 21 days after the statement date. You have what they call a payment date. You take that 10% and move the 10% over to the payment date. Then you pay that off. What it does is it triggers the FICO algorithm to give you the most amount of points possible for your credit score as you continue to move along. And of course, in the credit world, the magic number is 6 because they want to see 6 months of traction, 6 months of operation, right, of you doing good, quote unquote, for building your credit profile. Now, I will say this. If you pay your card off every month, I'm not saying it's totally bad. It's not going to help your credit score. Mm-hmm. Now, you'll go into a phase what they call in the credit world as ghosting. And ghosting means that you've been paying your credit card off every single month. And if you keep doing that every single month, guess what the credit bureaus have to go on to increase your credit score? Nothing. Mm-hmm. You don't have no balance. So they can't judge you on credit because you don't have anything to judge on, right? Mm-hmm. It's called ghosting. So you have to make sure that you have that 10% there by the payment date. So just wanted to reiterate that to you guys on that next. All right, we talked about authorized user. Of course, it's a great option. Those that have no credit at all, because some adults don't have no credit, and some of them don't have that much. And if that's the case too, you can also utilize authorized user program, and or you could utilize authorized user for your family, right? If they have good credit and have good limits. I don't suggest doing it on small limits though. Anything that's like below 10 grand, I probably wouldn't be an AU on, because to me it does not that much good on your credit report. You should have a limit of at least 20 grand and up to be an authorized user on, for it to be somewhat beneficial to you and the FICO algorithm to make sure that you are moving your way up the chain when it comes to credit increments. Decrease your utilization, of course, increases your available credit limit overall on your report, and should be done only with the purpose and goal in mind. Don't just be doing it just because you feel like doing it. You need to have a goal in mind to be unauthorized user, right? Whether you're going to start a business, you need to get a car, you need to get an apartment, you need to get a mortgage, you need to do something that's going to allow you to be benefited by this. All right, next. All right, we talked about this a little bit. So, mine is a little bit different, right? Definitely have some good, strong age, 4 to 17 years. City, Chase, Navy Federal, Capital One, Amex. Don't use Amex for authorized users. It's a great card to have, but the problem with Amex is it does not report your credit limit on the bureau. What it does is it reports if you are delinquent, though. And it reports if you're late and if you didn't pay your bills. They'll report that, but they will not report your limit. So it does not do you any good to be an authorized user, because the numbers are silent, right? On everything else, the numbers are loud, and they're going to report that every month to the three bureaus, and or if you're in the business side, they'll report it to either the SBFE, which is the Small Business Financial Exchange. They'll report to DMB, and they'll also report to other Equifax business and Experian business reports, things of that nature. You want to have a DUNS number for something like that on the business side. What it does to a client's profile, again, the way you want to utilize authorized user programming is to optimize your utilization. There are some folks who literally are at 80% utilization, 60%, 70% utilization, right? But they want to do good and they want to buy something. They want to, get a house or whatever. Great. Well, they can use an authorized user account, program, or trade line, or whatever the case may be, so that way you can lower your utilization instantly, within 30 days. Obviously, that's kind of the instantly, if you will, in the credit world, but within 30 days, right? And really maximum 45, but 30 days and conditionally, then you want to make sure that card reports on your bureau, and it takes down your utilization. And if you have a high credit limit, like I said, 60, 70, 80,000, 100,000, whatever it may be, your utilization can go from 80, 90% to literally 10, right? So that's a huge gap that will help you in underwriting if you're trying to buy a home, right? Again, an example here, 5K debt, 10K limit, 50% utilization, right? You add an AU, especially if you add something like an $86,000 card, you just went from 50% to 4.5. Like, that's huge, right? So just think about those kind of things when you're trying to achieve goals. You want to move a client from thin file to a thick file. They only have 0 to 3 trade lines, and you can add a couple to their account so they can accomplish whatever goal they need. That lets the report, build and become thicker, and you'll get a more approval confidence with that, right? Your age will get boosted as well, and your average age will increase, as well as your score optimization will move from a faster path from 700 to 750 or to 780 as we continue to move along. Next.
Well, and Jay, again, I just want the audience to really, really realize that this is like a hidden treasure, right? These are tricks of the trade that not a lot of people know about. So please, pay a lot of attention when it comes to this authorized user program. This is really a trick to help you build your credit extremely quick. But yes, I'm sorry. I just wanted to hone in on that for those that are trying to, take notes.
No, you're good. And those of you that do this, again, it's a authorized usering is an optimization tool, but it's not a replacement for your behavior. You need to ensure that you still manage your profile like you're supposed to, and you do what you need. We can't always save the day, right? I got friends of mine that do, other items in repair. I don't necessarily do repair, but I know how to do things of that nature, right? And I also consult on that. But for those that need that, right, this is not a replacement for you to just do what you want to do and spend what you want to spend and go off the kilter with the behavior. No, you utilize these things as tools and a means to an end to get you to the desired result. That's it. And you don't wean on it forever. It's just not a program that you just want to abuse forever, and that's how you move. No, you use it. You use this for getting yourself to a certain level, so then you can go back and add your own cards, and you can have the profile you want. But you need a kickstart, and that's what this is for. You want to still prioritize primary trade lines and payment history as well. And if it's strategically used, of course, and you can get approved for a lot of different things, and it unlocks those approvals for you. Next. All right, so the framework, right? What high scorers do. One thing is they will never miss a payment. You can look, and you can go research on Forbes. You can research on Yahoo. When it comes to Yahoo Finance, you can research all of these different big media outlets, and they ask, what do you need to do to get an 800 credit score? They're all going to come back and tell you, don't miss a payment. And AI is going to tell you that too. ChatGPT, Claude, all going to tell you this same thing. Trust me, I tested it, I've seen it, and I looked at it. So utilization between 1% and 8%, 6 to 10 trade lines, aged accounts, right, and increase your limit strategically. Let me tell you about this real quick. For those of y'all that just have a card and you let it sit there and it's not doing you no good, if I were you, I would start to set my calendar on my phone, and I would be like, all right, it's January. That means in June, I need to be looking at increasing my credit limit on my card, right? So what do I do for that? I don't suggest you call first. I suggest you go on the app to try to do it, right? You go on the app. They used to always say, try to go around midnight and things like that, but that doesn't matter anymore. Technically, you just need to just go to the app. Go to the app. It's going to ask you, what your income is, and it's also going to ask you like what your rent or your mortgage is, right? Now, there's a mathematical ratio, I would say, that you can kind of guide yourself on. It's nothing that's ironclad and clandestine, but I feel like there's a way that you can do the math on that to where you can move the numbers as needed to be able to get an approval that you want, right? And you can request this every 6 months on credit cards, namely, prime example, Citi, Chase, both of them 6 months, right? For sure. Navy Federal depends. I would say 6 months too, but sometimes they let you do it within 4 months. Within 4 months. So it just depends on which card you got, which bank you use, and how they move. Some banks decide to use relationship banking internally to do that as well. They might say, hey, look, you've been using your card. We've had a good relationship. I'm going to go on ahead and bump you up 10 grand. Or they might say, this happened to me This happened to me recently, and I'm always transparent about things, right? They said, hey, Jay, hey, man, you've had a card for like 10 years and you don't really use it. So we're just going to reduce your limit. So, sometimes that'll happen too. So if you don't want to have a reduction in limit, you need to continue to keep using the card. Consequently, I don't really need to use that particular card. So, but it got reduced like I think 6,000 or something like that. So, be mindful of that as you continue to be strategic about how you build your framework. Next. So leveraging credit. This is where we need to be looking at, right, in today's time. How can I leverage credit and utilize it to my advantage and use it to build legacy? But like I say here, credit's a tool. It's not a lifestyle, right? Smart uses of credit and leveraging credit, specifically build business growth, buying a business, real estate, Airbnb building, right? If you buy an Airbnb or you get an Airbnb, guess what you can do? You got a credit card that's $25,000 or something like that. You don't have the cash flow or the liquidity in order to do it, then go on ahead and furnish your Airbnb with like maybe 10 grand, right? You furnish it within 10 grand. Maybe you have 30 days of booking after that, which right now, I don't know, the Airbnb space is a little interesting right now. I wouldn't say that it's going to happen like that, but an example could be if you have an Airbnb that you need to furnish, then you have 30 days of booking, and guess what? That 30 days of booking at whatever rate you have daily, nightly, is going to eat away at you paying that money that you bought that furniture off of on your credit, right? So you're not really taking too much of a hit on that interest unless you drag it out forever, right? But let's say you pay it back and you're able to eat that up in 2 to 3 months. Guess what? You utilize somebody else's money to get an asset, quote
Mhm.
unquote. You're able to now build off that. You get your liquidity back. You can then take that same money that you just used and cash that out and do it again. Like all these different things are ways to leverage credit. Emergency liquidity, if you have something that you need to pay right now, then you can utilize credit to liquidate that and get you what you need, right? You'll have to pay it back later, but at least you'll have it to where you can do it. You become at this point your own bank. You don't have to go nowhere else. You just start to use your own um what's the word I'm looking for? You use your own pathways to
Mhm.
get things that you need to do. Rewards and cash back. You can utilize those too to leverage credit as well. Miles as well. I forgot to add that. Miles, rewards, and cash back. You can utilize all those things as a means to an end to benefit you. Education and certifications. If you need to get educated and continue to do self-discovery and self-education, you can utilize credit to do that. Investments with clear ROI. Don't get it twisted. Just because something look good don't mean it's good for you. You got to make sure that you invest in something that does have a proper return on investment. Bad uses, vacations, luxury purchases, and lifestyle inflation. Some of y'all, look, I hate to call y'all out, but some of y'all be like, yo, I want to go on vacation. And you're going to use your credit for that. I wouldn't suggest you do that unless you know you're going to be able to pay it back within 60 days. If you ain't going to be able to pay it back within 60 days, don't do it. Wait on your vacation until later. Or maybe your partner or your wifey or your husband or something like that can they can take care of that, and you don't have to worry about putting it on credit. Like just be very smart with that. Luxury purchases, you don't need it now. Anything luxury, y'all, is exactly what it is. It's a luxury. You don't need it. You don't need to go to Louis Vuitton and buy a bag. You don't need to go to a dealership and have to buy a car unless you really, really, really need it, right? You don't need to go to Gucci. You don't need to go to AP, right, and buy a watch, right? Like you can want to do those things if you can afford to do it, but you don't need to do it. Lifestyle inflation as well are also bad uses of leveraging credit. So you want to be careful. Use it to create assets and not liabilities. Next. Building wealth through investing, right? Asset classes that you want to do this in is stocks, ETFs, mutual funds, real estate, and business ownership. Big thing right now, everybody's heard of the SpaceX IPO coming up, right? Everybody's heard of the Claude IPO coming up. Everybody's heard of the OpenAI coming up after Claude, right? And I think it was actually supposed to be OpenAI first, but Claude found a loophole in order to be able to run through their IPO a little bit quicker. And, when you look at this, you have to know what's hot, what makes sense, what doesn't. And if you're one of those people that, hey, you risky, cool, be risky, right? You have a high tolerance for investing, that's great. You can also do trading as well, right? So beginner strategy is have an emergency fund. They always say have at least 6 months of living expenses, but in today's time, I doubt that's going to happen. Just being realistic, right? Maybe it's 2 months, maybe it's 3 months, but the goal is to have 6 months. 401k, Roth IRA, so you don't have to worry about taxes up front. ETFs, exchange traded funds, SEP IRAs for those that are entrepreneurs, and 529 plans, those that are that have kids that are going to school, but you can also utilize that for an investment strategy. And also those of you that have life insurance, I don't have the whole UIL thing, but I do have whole life insurance. You can actually take life insurance too. You can borrow off of the whole life insurance policy, and you also utilize that whole life insurance policy as your own bank as well. You cannot do that with term though. Just be clear. You can use a whole life insurance policy to take off the death benefit, so to speak, and you can utilize that as your own bank. And the cool thing about the life insurance policy is that you can give yourself a loan and you only got to pay the annual interest, not daily, but the annual interest of that at the end of the year. And you don't got to pay the loan back. You don't want to. You can. You don't have to. The only thing you're responsible for is the annual interest at the end. So maybe 5% or something like that, and it's a couple $100, but you loaned yourself 10 grand. You only got to pay whatever the annual interest is that your policy demands, and that's it. So again, we keep on talking about this whole strategy of becoming your own bank, right? The bank's going to try to hold you and be like 5%, 10%, 20% off what I let you borrow. But why don't you reduce the interest on what the bank's going to charge you, become your own bank, and you don't have to worry about any of those pitfalls. So be smart. Next. All right, today's time. What should you invest in today, y'all? These are like literally right now. Like, did some research on this, looked at some individuals who are pros on this stuff right now. Even some of these things are in my own portfolio. But your buys that you need to have right now, everybody knows we're looking at the space stuff. Now, for those of you that are looking at the SpaceX, don't buy it right now. Unless you're early IPO, one of those investors who are on the other side right now that are going to cash out, don't do it. Wait the 6-month timeline so they can actually sell and liquidate. Once that happens, the general public is able to then buy the stock at a certain price, which just got released this morning. It's $135 per share. So SpaceX will be $135 per share, which technically is still a little bit expensive, but you could still buy it. But I would think that you would want to wait 6 months first, see what happens with it, because it's gonna go down, right? So you can buy it cheaper, and then if you need to sell later, you can. But owning the stock will be a great thing to do because it's gonna be, I think, right before this live, I checked and they said that it was gonna be the largest IPO ever in history. I think it now went up to 1.7 trillion for the market cap on that. So you want to make sure that you look into it. But I wouldn't suggest you buy it right now. I suggest you wait and you buy an ETF that has SpaceX in it or that has space-related topics in it or companies, right? So at any rate, Broadcom, AVGL, you want to have that in your portfolio. AMD, the chips, right? NVIDIA, you want to have those in your portfolio. I can tell you right now, if you haven't invested in NVIDIA, shame on you. Like, you should have did that a long time ago. And even for me, I should have done it before I did it. But I did it, and I have a nice chunk of change in there now. But NVIDIA is the stock that you want to have. DRAM, Brown Hill Memory, again, chip type things. Micron, definitely want to have that in your portfolio. SanDisk, again, memory. AAOI, AXTI, AEHR, CIFR, all these are exchange traded funds, ETFs that you want to have in your portfolio. MDIS, BE for energy, FLNC for energy, Cerebras. I definitely want to look into that. That's supposed to be the next NVIDIA, basically. So Cerebras is one that you want to have on your docket to make sure that you invest in. Anthropic is forthcoming. We talked about that. It's going to be October 26th. Quantum IPO, that I think it's today. I should have actually talked to my broker about that. But that IPO, I think, is today. You want to look at that as well. Rocket Lab and Oklo, too. Look at those stocks to invest in today or ETFs to invest in today. You should see a pretty good return within the next couple of years, if not even within a 6-month timeline. But put some money in there if you're trying to build something for your kids. Start a fund for them, index fund or something like that. That's a custodial IRA or a custodial fund, and get them started too, so they can build wealth before they're even like 18. Like, I saw something yesterday, and this parent built up. They were paying $400 something. They started out, I think, with like 30 or 40 grand, and they were paying like 400 or 500 a month for this kid thing. And they checked out when he becomes 50 years old, he's gonna have 38 million. So I suggest that you do something like that for your kids and build legacy for them, while you can. Next. All right. Don't forget, personal credit drives business funding. Folks, you're not going to go out there and get business funding if you ain't got no personal credit. It's just not going to happen. People are going to tell you that all day and sell you a dream on Instagram and social media and be like, yo, you can get business funding. You can just do this. Or you just need to look at retail cards. You just need to look at net 30s and net 60s and net 90s. No. You need to get your personal credit right first, period. That's it. So make sure that you're, at a 650, 700 and up before you really start looking at solid business funding so you can get that and build what you need, right? Because what lenders will actually do is, initially, if you ain't got no business credit, they're going to pull your personal credit anyway. They need to see how you move, right? FICO and bank card scores, right? And consequently, score 2 and score 6. Sometimes they use score 8. Those are for mortgages, though, right? So they assess your risk even before looking at your business, and they're going to require what they call a PG, which is a personal guarantee, for most early stage funding. And most of those approvals are personal credit driven in 80 to 90% of cases. So if you ain't right yet, Get yourself right first with personal credit. And that's where getting credit consulting comes into play. People like us can guide you in the right direction and tell you where you messed up. Because I'm one of them kind of people. If you want somebody who's going to tell you and give you fluff and flowers and marshmallows about how you're doing your job and how you live in your life, I'm not your one. I'm not it. But if you want someone to tell you what it is, to be honest and tell you where you messed up, then I'm your person, right? So please make sure that you build it how you need to. Next. Personal versus business credit, real quick. Personal credit, they're going to look at your social, your FICO score, personal expenses, and and it impacts your personal borrowing. Business credit, EIN, business scores, Dun and Bradstreet or DNB, business expenses, and also impacts your business borrowing, right? One of them is semi-related to the other, but they look at different business. They did look at different reports. Personal credit report, business credit report. Experian normal, Experian business. TransUnion normal, TransUnion business. Equifax normal, Equifax business, right? So small business financial exchange, SPFE, all those different things are going to be what agencies will be that look at your credit on the business side. Next. All right, business credit the right way. How do you set it up? This is your blueprint. Core setup, you need to have an LLC or a corporation of some sort or S corp, right? EIN, business bank account, DUNS number, professional presence. Don't be coming up in here talking about you have a professional company, but your website is I don't know what I'm doing at gmail.com, right? Or my name is Keisha at gmail.com. We're not doing that, right? We're Forever4Ward.com, www.ekeducationllc.com, www.nvidia.com, whatever that looks like for you. It needs to be it needs to be professional. You have a professional email that has the suffix of your company on it. At company.com, not Gmail, at company.com. Phone, want to have a regular phone number, and if you are able to afford it or you have your business states you need to suggest this, is have an 800 number, 844-888-800, whatever it is, 866. 800 number is also beneficial too. Stage 1 on credibility setup is just business address, not a PO box, professional email and domain, banking relationship. Make sure you have that set. Stage 2, initial credit, secure business card or other vendor accounts if necessary, right? Net 30 accounts are optional but not preferred. I don't like net accounts to build business. Build business credit. I just don't like it. That's not how I built mine. I built mine straight off a Wells Fargo card, and then I got a secured card, then I got an unsecured card, then I got cards from other banks, then I started to increase my limit. Excuse me. All these things take time. You're not going to build credit, y'all, to 800 in like 2 months. It's not happening. 6 months. It's not happening then either. Almost, unless you already have your score starting at 650 to 700. Then it'll happen quicker. But if you're starting off at 400, no. I'm just going to be honest. Okay. You need to follow these directions and follow these tips and tricks for you to get there. Step 3, revolving credit. Bank issue credit cards from Amex, City, Chase, or something like that, or a bigger bank or a credit union. Stage 4, scale funding. Then you're ready for lines of credit. You're ready for 50 to 250,000 in funding and leverage strong payment history at this point. So you do this in stages, right? Not all at once. So by the time you hit stage 4 and building your credit, your business credit, you're ready to roll. All right, next. What banks and lenders look for? Underwriting criteria, credit profile needs to be 720 and above for strong approval. 750 is what's ideal for having high limits. 30,000, 40,000, 50,000, 80,000, 100,000, unlimited, right? Utilization, less than 10% per card, less than 30% overall. That's a hard cutoff zone. So why is that the hard cutoff zone? Because FICO algorithm scoring says that you need to have less than 30% of your credit used before it damages your profile, right? Preferably 1 through 8 for my 800 credit score people, but 30% is the legal threshold for all credit bureaus that you need to have utilization wise before you get in trouble. 43% is maxed out. Credit depth, 6 to 10 trade lines total and 3 to 5 active revolving accounts. Payment history, again, 0 lates. No collections or charge-offs. 1 30-day late can drop your score 50 to 100 points. I've seen it, and it's terrible work. All right. income and cash flow, personal income, business revenue, bank deposits, statement loans. I know a couple people that allow statement loans, and you're able to do that nowadays too. Didn't used to be able to do that back in the day, but you can do it now, right? So if you have some good business income, you can use a statement loan to get a house or whatever the case may be. And then your bank relationship, right? Existing accounts, higher approvals, and credit unions have more flexible underwriting. Your time in business should be, if you're 0 to 6 months, you're gonna probably need a personal guarantee. If you're 6 to 24 months, that's a toss-up hybrid. 2 to 3 years, you should be able to only use business credit for you to do things. And the trick of the trade in taxes and all those kind of things is that you want to try to eventually get everything out of your name, put everything in a business name or something like that, so you don't have any assets that you own, but other things own assets like trusts and stuff like that. So be mindful of that. That's a whole nother topic. Next.
Yep.
Favorable to unfavorable credit profile. I'm gonna kind of run through this because I know we're kind of getting out of time. So favorable, what gets high limit? 750 credit score and up, 3 to 5 credit cards, low utilization, no negatives, 5-year average, thick file, 7 to 12 accounts, strong income. Unfavorable, which means declining in the underwriting zone. Thin file, 0 to 3 accounts, high utilization, recent inquiries, seeking credit, late payments and collections, low limits, and no credit mix. Again, I would not suggest having in your portfolio any credit cards less than $5,000 because it doesn't do much for you. You're going to walk around with a credit card that's $1,000 for what? You're not doing anything with it. So just get rid of it, period. All right, next. Structure a credit profile for max funding. Phase 1 through 4 here. Foundation, build depth, scale, and funding execution. Fix the errors on your credit report if there are any. Optimize that utilization again, add trade lines or add AU trade lines, so to speak, right? You can work with me for that. Build depth, one installment loan, start credit stacking, primary credit cards, right? Phase 3, increase your limits every 6 months, keep your utilization low, and add 1 or 2 more trade lines. And then phase 4 is the funding execution. You're ready to get funding, apply strategically, and just don't do stuff randomly, right? Stack your approvals from all the major banks, and you should be on your way. Next. What you must understand, business credit is not separate at the start. First drives your approvals. It's with you. Don't hide from personal guarantees early. You earn your way out of them. Funding is profile-based, not just score-based. Your structure matters more than your score. Credit is a strategy, not an event. Timing and sequencing and credit is everything, right? And AU is a tool, not a shortcut. You must be paired with primary behavior, right? We talked about this before. AUs do not replace your behavior. You need to act accordingly as you're supposed to build your credit. Next. Non-negotiables before helping clients. Prefer they have a 680 plus credit score and up. Not necessarily always required, but preferred. No recent late payments within the last 12 months. If you have late payments, collections, and charge-off, I know 2 people that you can work with to get that worked out, right? On the repair side. I don't do the repair side. I do the consulting side and the AU side. Have at least 2 to 3 trade lines. Ideal before funding, 700 to 750 credit score. 4 to 6 trade lines. Optimize utilization under 10%. Make sure you have a clean report. On the business side, all the things we talked about earlier, you need to have, period. Next. I don't just help people consult about credit. We really try to engineer approval-ready profiles for what you need. And we collaborate with other individuals and partners for stuff like that, depending on what happens and who we see and what kind of goals need to be met. The competitive advantage, obviously, is the AU program, which really encompasses speed and leverage, education and strategy, sustainability, and real underwriting knowledge equals results, right? If you need these kind of things, you definitely can look at that email address right there, jv@thejvealbrand.com, and you'll be able to check into that. Okay.
And Jay, I'll just add to this too. For every masterclass, we see what an issue is, and we want to be able to provide you with a resource. And so, absolutely reach out to Jay if the information that he's provided to you, if you need some consulting, one-on-one consulting on ways to improve your credit, please. This is why I wanted to bring him in as a key resource.
Absolutely, absolutely. Next. Real quick, let's talk about a brief moment of leveraging AI responsibly, y'all. On especially when it comes to financial literacy, if you're going to use it to do something like this too, don't always think that AI is going to give you all of the answers. Right? Smart
Yeah.
usage for this is you can use it for budgeting, investment education, resume building, business planning, research, learning new skills, those kind of things. But the bad part of that is, things that are political, blindly following AI advice, financial scams that come about, fake investment schemes, sharing sensitive information. All these things matter when it comes to utilizing and leveraging AI responsibly. You can trust it, but always verify what you're doing. All right. We come into a time where you have to be very careful with how you do things with AI. So you don't want it to backfire and not give you what you need or what you want. Okay. Next. Now, again, right here is a slide of my contact information. This is going to be your bread and butter right here. So definitely follow me on Facebook or Instagram or what's the other one? Threads, LinkedIn. My number's there. My emails are there as well. You definitely can email. Preferably, if you're going to talk about credit or financial literacy, the Jay Veal brand is the one you want to use. If y'all need tutoring out there, your kids need tutoring, you can also use the first one, the Inc. Education LLC. I also own the top Black and brown owned education and tutoring company in the country. So you definitely can benefit from that. Adults that are adult learners, we can help you all the way to the doctorate level. So yeah, if y'all needed to reach out, definitely reach out. And I think we're in the Q&A.
Yes. No, we are. So again, for those that are in attendance, you see why I brought Jay on. Just thorough, efficient, but really good information. Again, I think we might have time for maybe one or two questions. Um, okay, Jay.
Yep. Definitely, for sure. Yep. You know what? And when I was looking at just being in the industry, I was like, dang, that's a big thing for people. Because I remember years and years and years ago, folks were like, yo, I maxed out my card. I had a $10,000 card and it's at 10,000.
Yeah,
That,
easily.
that's what it was. No, if you had 10,000, 4,300 is maxed out. So yeah, it's definitely a
Well,
really.
and Jay, the points that I like that you brought up, because I think it's a rule not a lot of people know about, is
Mhm.
keeping that 10%. And then anything over 30% is deemed as like being over. And so,
Yeah,
yeah, I'm glad you honed in on that.
yeah, it's crazy work. Okay, so if I don't have any credit and the only credit cards I can have high interest rates, does it still make sense to get one? On that, it depends on what the limit is. If you're qualifying or trying to get a credit card, if you don't have any credit and you're trying to get a credit card and like let's say it's 24%, um, you need to see what that limit is. If they're gonna offer you like 10K or 20K, different story. You can get it, but utilize it sparingly or enough to build your credit score based on the 90-10 rule.
Hmm.
So if you're not, though, then you need to be very careful on how you utilize that credit card, or you get that credit card with a high interest rate for the credit limit only so you can start the leverage utilization.
Mm.
That's a fine balance of mathematical skill. So those y'all, I forgot to tell y'all, I'm a mathematician by trade. So I know how to work numbers like crazy, right? And I look at them all the time. And so you have to look at different ratios and how you're going to move that along so you can get the right card that works, that makes sense for you. But do your research first on which bank and financial institution are offering the best annual fees, if there are any, interest rates, rewards, points and or miles and or sort of the other one. There's another one I'm missing, but all of those cash rewards, right? Those are the things you want to look at when you're building a credit card, and you can use that. You can utilize that too to leverage to pay off your card. The more you use it, the more points in the cash you get. You can utilize the internal cash to pay the credit card off, even with the higher interest rate. But I would suggest if you're not familiar with getting the credit now, go to a secure card. So that way you don't have to worry about it. Secure card, you can utilize your own money to borrow against. You don't have to worry about interest rates.
Mhm.
So that kind of can give you a little bit of pathway. Oh yeah, yeah,
So,
and I've been on. You want to talk to somebody who's been in all the programs? I've been in at least 9 accelerators in terms of startups. I've been in Goldman Sachs. I've been in Masters of Scale. I've been in Nasdaqs. I've been in Able in San Francisco, Silicon Valley. I've been in one in Houston. I've been in Goldman Sachs, 10 KSB. Like I've done it almost all. So if you want to founder land, that's me. Okay. So if
mhm.
you want to know about what you really need for great pre-work and startups, I just reach out and I can help you with that. And I literally just graduated from 3 programs within the past year and a half, all from Silicon Valley. So I can tell you about that region too, which is kind of hard for the Black and Brown community as well.
Well, one of the things I was going to say at the end is that Jay spoke about personal credit versus business credit. So I'm bringing him back again for the founders so he could talk a little bit more about starting a business, leveraging credit. And so that was a perfect interlude into that.
Absolutely. What else we got? Y'all need to do this. Yeah. Yeah. Yeah, absolutely. I could talk about entrepreneurship all day. It's one of my funnest things to talk about. So, y'all know people that have been through the struggle. I've been through the struggle. I've built something, seen what it looks like, built the different processes of that, like all the different things all the different things. I've seen it, and entrepreneurship is not perfect, and it's not a straight line. It's always going to be rocky. There's always going to be ebbs and flows, and just something. If you're not built for it, don't do it. You know what I'm saying? If you are cool with the journey of maybe having bomb money one week and having no money the next, I mean, whatever it looks like for you, whatever your journey looks like, if you're built for that, then do it. It's a liberating thing if you can do it right.
So again, I think that that wraps up all of the questions that we had. But Jay, I don't know if there was anything else that you wanted to add um, before we close.
Yeah, I would just say for those of y'all that are on the live, we are in some interesting times, rough times right now. Going to recession type vibes, right? Going back to kind of be resembling 2008, 2020, right? Before COVID. Like all these different things is happening right now. You need to watch your pockets. You need to stay close and hoard your money or cash. If you're going to do something with it, invest it. But don't be out here spending a whole lot. It's not the time for that no more. Right? If you out there even dating, all these different things, man, this is not the time to be blowing a whole bunch of money right now. We are not in that time anymore. You need to be careful about how you operate, how you run your money, how you live your life, how you run your household. Let's stop talking about how we can separate as people in the community and how we can run it up together as partners and units, right? Stop talking about these percentages and 50-50 and 70-30 and 60-40. Like we all understand that whole conversation about providers and all that. This is not the time. This is the time for y'all to figure out what's going to work for each individual household, but what's the partnership going to look like so y'all can come out on the other end looking better than you started. Like this is the time for that. So I just encourage those people, the personal situations. You get your stuff together. It's the time to get your stuff together and to start investing in stocks. And we have the 3 of the 4 of the biggest IPOs to ever hit in history. It's not going to probably happen ever again. Invest your money in some of these IPOs after the threshold of 6 months, if they're a big one, or these ETFs, these REITs, these real estate investment trusts, all these different things. Start leveraging money and really in what do you call it, in life insurance policies and things like that. Like all this stuff you need to do now. And for the ones that are entrepreneurs, this is the time you definitely need to be very lean on your cash. Right? VC land is not really doing a whole lot of loaning out. I mean, not loaning, but not doing a whole lot of investing and giving out money right now. And if you do, you got to at least have, like $1 million in revenue, and you're just starting out. Like it's a lot of things. They're moving the bar even high. I just talked to somebody the other day, a super awesome founder that I know that's done exits before, and the VC is not doing what the VC need to be doing anymore. It's not the time. So build, lock in, build what you need, get customers, get cash flow, and then try to go the VC route. But right now, you just need to focus on you and focus on your business and start a scale and get customers. Same thing I need to do for what I'm doing. So.
Well, with that, Jay, I cannot thank you enough again for sharing all of your brilliance in this space. We truly appreciate you sharing like the tricks of the trade. As I said, financial literacy is something that I think everyone needs to learn more about. And so you're welcome to Forever4Ward Masterclass anytime, and we look forward to continuing the conversation. Thank you all for attending. Again, if you wanted to contact Jay, please take a look at the recap. Also, his information is on the bottom of the screen right now. But yes, if you need some assistance consulting, please feel free to reach out to him. And again, thank you all.
All right, y'all. See y'all later.